Angelina maybe, but the Brad Pitt one didn't quite look like it. So very strange. Let's break down this week's market action. We've got Paul Dietrich, Fairfax Global Markets CEO and Chief Investment Officer, who's focused on two undervalued investments. And Mark Sebastian is in the pits of the CME. Mark, let's take it to you. On this Friday, we see a moonshot for the markets. What happens? What's the follow-through for Monday?
You know, Monday is going to be a bank holiday. Bond markets close, so volumes are going to be light. I'd be shocked if we don't have a little bit of carry through on Monday. You know, really interesting day. I think today basically throws out the belief that good news is bad news for the market. What I think it proves is good news if it's strong enough that we can deal with higher interest rates. 3% interest rates on the 10-year is perfectly fine if the economy grows. It's only a problem if we have really, really anemic job growth, which, you know, 204,000 is not spectacular, but far better than we were expecting. And if you consider a shutdown, I think relatively positive news this morning.
Mark, that's a very interesting point, that interest rates are only to be feared if you have a stagnant economy. If the economy is growing, then you can stand a little higher interest rates. But, Paul, the last time this began, that creep up last spring, after Bernanke said they're going to taper eventually, of course, he didn't give a specific date, but we saw the market freak out as a result of interest rates. Do you expect them to go higher than this, or are they going to plateau just before 3% on the 10-year?
Oh, I think we'll see this plateauing. I'm one that I don't believe we're going to see tapering anytime soon. If you took out the inventory rise in the gross national product, we're at a 2% rate, which is very mediocre. You know, I don't think that's going to excite the Federal Reserve, especially Janet Yellen, for tapering. And I don't expect, and because of we're going to go through the debt crisis again at the beginning of next year, I don't expect tapering until at least mid-year of next year.
At least mid-year of next year. So where do investors put their money, Paul? And when you have clients on the phone saying, I'm nervous, take profits, what do you say to them?
Well, you know, we're a value investor at Fairfax Global Markets, and I'm finding it extremely difficult to find value stocks in this market. Basically, I think it's a bit overpriced, and so people are asking me, where are the undervalued plays in this particular market? And what we're seeing is really, I think, in China and in Asia in general, and maybe even commodities. You know, every 10 years, the Chinese government goes through a leadership change, and there's always a slowdown. But now that leadership change is in place, they've got their new 5- and 10-year economic plans, which they take very seriously. We're seeing their breathtaking plans. I mean, they're talking about moving 250 million people from rural areas into cities that haven't been built yet, but will be built over the next 12 years. I mean, think of the copper use. Think of the steel and all the commodities that are going to go into that.
Of course,
and you're seeing copper going up.
That does depend on credit holding up, and so far it has held up there. Some people think it might be ready to crash. But we put up, Paul, two of your pharmaceutical picks, Abbott Labs and Taro Pharmaceuticals. I think this is interesting that you're going to pharmaceuticals because it's really an Obamacare play, if you will, as doctors get stretched with Obamacare, and clearly with all these extra people to ensure there are going to be fewer doctors, they're going to be prescribing more pills. It's take 2 pills and call me in the morning. So pharmaceuticals might do very well, right?
Yeah, you don't have to be a brain surgeon to understand that we're going to add another 20 million people to Medicaid. There are going to be 32 million formerly uninsured people who are going to be put on the system. And the irony of this is that those people, the formerly uninsured, tend to be buyers of brand name pharmaceuticals, and they don't buy generics. And so I think the pharmaceutical companies are particularly going to benefit from Obamacare, and especially those with non-generic, you know, brand names.
Fascinating.
Yeah, it truly is, and that becomes the largest question here. As we look at all the things that are moving here, Mark, I wonder, and Warren Buffett has said this to Fox Business, that when tapering does happen, everybody who owns stocks probably will have their finger on the button to trade. We don't know in what direction. Okay, what direction do you guess?
Well, I think it's kind of.
Let me let Mark answer first, and then Paul, you can jump in.
You know, I think it's going to be less of a big deal than people realize. The thing about tapering is the market will see it coming. So it's not going to be the Fed comes out and said, we're tapering and you're going to see a big sell-off. You will see the market make its decision on what the Fed's doing probably a couple of months ahead of time. And it will be kind of if we sell off, it's going to be more a death by 1,000 paper cuts than some big, huge event. Long term, the reason why they taper is because they think the economy's doing better. That should be bullish to the stock market. So you'll probably see some sort of short-term sell-off, which will be maybe a real buy-the-dip opportunity. Those that are afraid, I think with the VIX at below 13, why are you out buying puts against a long portfolio? Portfolio insurance is so cheap right now that, if you're afraid of missing the upside, but you're afraid of the downside, then buy S&P futures and buy options on the put options on the S&P future to protect yourself.
Well, at the same time, I got to ask, even Paul, I know you're generally optimistic about the market, and even though we're growing at a slow pace, the market is okay. But you said before, through value criteria, you have this kind of value criteria for judging stocks. You don't see many stocks at all that fit into that criteria right now, do you?
That's correct, and that's why we're looking at undervalued and oversold plays like in Asia and commodities.
Asia and commodities. And do you hear any of that chatter, Mark, on the floor about that?
Yeah, I mean, I think people are looking at oil and think that could be a little rebound.
Because it's gone low, and if we were able to show, I don't know, 6-month chart, anything, a 1 month, you would see that
right.
we have seen a relatively precipitous fall, but that's partly on fundamentals that there's so much supply.
Yeah, well, take a quiet look at quietly ExxonMobil has started moving again after their earnings. That's one that's creeping up. Now, in terms of Asia, the only thing I know about Asia is the song Heat of the Moment. So I'm not an expert on what's going on in China. But no, I think there's value in energy. Gold's probably a little overdone. And really the financials, if we do start seeing rates rally, then the financials are probably undervalued.
Well, and they took off today, though, it has to be noted. Paul Dietrich, good to see you. Mark Sebastian, we'll check in with you in a couple of minutes when the S&P futures close. Thanks.
Have a good weekend.